And we're live. Just in the nick of time. Content provided at the event is for general information only, not intended to provide specific advice or recommendations for any individual. Any performance reference is historical and no guarantee of future results. All indices are unmanaged and may not be invested into directly. Any economic forecasts are set forth during the event may not develop as predicted, and there can be no guarantee that any strategy will be successful. These thoughts and opinions are those of Gimbal Financial and do not represent the views of LPL Financial. Securities offered through LPL Financial, a member of FINRA, SIPC, and investment advice offered through Gimbal Financial, a registered investment advisor and separate entity from LPL Financial.
Nice work, Amanda.
Good morning. I kind of felt like I slowed that one down today. Might just be the end of the week. We've got a move that's been happening. I took that one just a little slow. I liked it.
Now, this month's anchor. What'd you say?
So I love that background.
This month's anchor is going to have a picture of my oldest, and it'll go in with that disclaimer. It has her safety goggles on, so you all have to watch for it when you get in the mail these next couple of days and see her safety goggles are not to protect her eyes. Just pay attention when you see it.
Maybe Mr. Potato Heads, but not hers.
Exactly. Exactly.
Well,
Doug, where are you?
Hey, I'm at the new office. We have officially moved in. We're here. We're getting our technology set up over the weekend, and it just feels like home already. I'm so thankful. And this whole process, I know this sounds weird, but I think I'm gonna miss the process. It's been a wild one, but we're here, and it's really great space.
The process got us COVID ready before COVID got here, don't you think?
Yeah. The process, the journey. I mean, we talk about that a lot. It's really where all the living is done. And so, the next part of the process is just walking through life with all of you and talking about your investments and talking about what you will convert these investments into someday.
My Wi-Fi went unstable for a few minutes. I don't know if I was still here or still there, but I don't know if it was mentioned, but before Keith put on that fancy background, it was totally empty in the garage, which is just such an exciting thing to see. I did catch Doug saying how fun of a process it's been, and it sure has been. It's been about a year now, I would think, maybe to the day or so, since you pulled the plug on that purchase. And so it's been amazing to see the transformation. I know so many of you came over in September and got to see the drywall put up, or simply just the frame being established. And so I'm excited to be in there. It's going to be fantastic, and we are so excited to show it to everyone else.
It's fun. It's going to be fun. It's going to be fun to be in your guys' presence on a regular basis again. It's kind of unusual working remotely like that. I don't know how other businesses will thrive with it. I feel like maybe I'm old school. I do better actually being in the presence of people and bouncing ideas off that way versus doing everything virtually. What do you guys think?
Yeah,
I will definitely be excited.
A lot on this call about COVID, and we've done the COVID tracker and given some updates and opinions along the way. I'll throw it out an opinion. I think COVID has really changed our habits, and that could be business habits, the way we operate. I know several of my friends, they don't go into an office anymore. I hope they return. They hope they return too, but they've got some new habits on how they're doing things. And those habits, they trickle down to how we spend money and how people make money, how people are making a living and doing their life. And so I'm looking forward to being back together very soon, because the creative genius is sparked from a togetherness. And so I think that will be a big part of working in the same space.
I wonder about people your age, Amanda. Like when I was in my 20s, I had a job in a big office, and that was where a lot of our social network kind of percolated. And maybe some people did it at church meetings or whatever when they're in their 20s, but I'm not sure how you integrate culturally when you're in your 20s now, besides the stuff on the phones. And I don't know that that communicates very well. It seems like there's a lot of conflict that happens from trying to communicate on a screen versus being face to face. What do you think?
Well, I will speak for myself, but I love you guys, but my social world does not stay, and it did not start with Gimbal. The age just
Right.
is a little different. But overall, I think, especially from my perspective, going to a school in Indiana has been a huge help. I'm still, my social circle mainly revolves around people that I did attend college with, and even still high school as well. And so I do know, there are two of my good friends. They have a job that is totally remote all the time, even pre-COVID. And so I think that's become a popular trend amongst people my age as well. It has to force them to get together with people on a more regular basis, just so they're not going crazy in their apartments. But I think this has been a trend that my age group especially can easily adapt to, because a lot of them had even adapted before COVID hit. And so, yeah, I would say the remote work is actually appealing to a lot of people my age. Technology is relatively easy for us to manage and stuff. So depending on who you are. I know I'm excited for being back in the office with you guys, but there's also a nice flexibility of if I can work from home a couple of days. I might have lost internet. But yeah, that's what I have. And I know Debbie's going to be flexible too. We've proven in this time that we can work remote. Our phones work remote. And so it'll be really cool and really fun, but I know we are social beings and it's so good to be together. So
It's really amazing. Like, yeah, I kind of reflect on this time, kind of like having a child. When we had our firstborn, you don't get any sleep. And one of the takeaways was it's amazing what you can do on little sleep. And kind of like COVID, it's amazing what you can do during the shakeups. And so, yeah, we're keeping this thing going, and it's going to be a great future ahead. 2021 is just around the corner and looking good. But Keith, you want to go into markets? You want to talk about where we are, or where do you want to go?
Well, I think historically, it's good to know that recessions have probably birthed a lot of the greatest companies ever, because it forces creativity that isn't otherwise there. There's a complacency that goes on in a prosperous economy that is just, the rug is ripped out from underneath people. And so if you go back and check out some of the historically great companies, you'll find out a lot of them started during the recession. I don't know if we're officially still in a recession or what the situation is. My gut feeling is that we're probably going to teeter on the edge of a recession for quite a while with some of the things that are going on. I think I saw some news this morning, and I think kind of presented my bias against it, but like I saw Dr. Fauci now is saying that a vaccine may not work. I don't know if you guys saw that, because and so that my gut feeling is our leaders have just failed miserably, both politically and business leaders, through the way they've handled this thing by not making incremental decisions. And Dr. Fauci, I throw him in that bus as well. So if he thought there was a possibility that the virus wouldn't do any good, that should have probably been presented a long time ago in the decision grid. And so that, I think, then with those leaders that have made just broad decisions with little information, they're just gonna make decisions like that. We're gonna make extreme decisions, and it's those extreme decisions that'll disrupt the economy, in my opinion. I think incremental decisions allow an economy, business owners, people to make gradual decisions. We're less with less problem than if now that they're going to come out and say, hey, this vaccine's not going to work. So yeah, I think it's going to be a real interesting time. I think there's going to be possibilities for everybody to do things, but I wouldn't be surprised to see it really get interesting in the months ahead. But here's a picture of the market.
Hey, before you dive into the market, Keith, you bring up an interesting point about, you know, recessions and contractions, and some of you may remember your high school economics course where it talked about the different life cycles of an economy, that you have peaks, you have contractions, you have troughs, you have expansion times. And really this has been a pretty unbelievable expansion that we've had coming out of the 2007 to 2009 time period. I can remember Keith and I were driving to Chicago to an investors conference in July of 2007, and we were marveling over the just growth that had taken place, especially in the home buying and home ownership area. And there was a great expansion that took place, and then there was a peak, and then it wasn't. And so I think as we walk through these life cycles of a economy, as a business economy, we're just going to go through these times where it makes sense to have your capital that you're hoping to grow. It makes sense to have it exposed to risks. And then there's other times where it makes sense to not, and to stay a little passive. And, you know, we know that cash really doesn't do a whole lot for you on the growth side of things, but it sure can protect capital. And there's definitely a place for it in the cycles of an economy. And so as you walk through this, that might be worth exploring, just those business cycles. Where are we in these cycles, and how did we get there?
It's a good word, Doug. The idea of being fully invested all the time leaves you to some risky situations. Like, I don't know if y'all can see the Russell 2000 index I've got on the screen or not. Russell 2000 is a broad index of smaller companies versus maybe the S&P 500 or the Dow that you might be familiar with. But if you look over to the left of this screen, I drew a red line across the tops of where the Russell 2000 has been over the last 20 years, 22 years, it looks like. And that's kind of the slope or the angle of growth of this particular index. It has in times grown much faster than bigger companies like the S&P 500 or the Dow Jones Industrial Average. In times not so much. If you look where we went through the 2008 recession there, and you see that index dropped off, and it dropped more than in half, and then it started bouncing back. But if you notice that I drew a line right here across where it was before 2008, and it kept bouncing down to this level for the last 15 years, basically. It's really interesting. And most recently was in the March, April timeframe. And then I kind of drew another line here where there was highs before, and that became kind of a floor. And then I drew a line here of the new highs that it's hitting recently. And we had mentioned a few weeks ago that these sort of stocks were starting to show some action for which they haven't shown in a long time. And so this is interesting to me. I don't know whether this is going to, take off again like it did back in the late 90s and first few years of the 2000s or not, but it's been a section of the market that's been out of favor for quite a while. And it's a challenging section because sometimes those stocks aren't as liquid as maybe like what you would see in the S&P 500, which is this index right here.
I really like this 20-year look back. This is basically my career. I graduated from Taylor University in 1998 and immediately got into this business. And so it's interesting to look back and see where I've been. And for many of you investing, this is your ride too. I mean, you may have had a 401k before this, or you might have had some money invested in the 80s and and 90s, but for many of us, this is it. And you look back there at 1998 and you see we touched those levels, 2001, 2002, back 2008, 2009, and coming down to those levels is scary. That is not a lot of fun to go through, and you look back and say, man, my account was at an all-time high. Will it ever get back to that? And again, it's just the cycles of business, knowing that this is going to happen from time to time. These moves are going to happen, and dialing in your time frame for your money and saying, okay, I can risk through something like this is a helpful conversation to have and a helpful exercise to have.
I think if you look, Doug, shortly after you got on board and you could buy every stock there those first 2 years of your career that had a .com after them, and the stock prices went up, and then until they didn't, and this market peaked out over here toward the end of 1999 or the beginning of 2000, and I drew a red line across there, and it was all the way to 2013 before those levels were sustained and maintained again over that period of time. And so a lot of us maybe have forgotten the pain of what that looked like and felt like, but at the same time, that's the nature of investing in the stock market. The stock market can be friendly like it has been for the last few years. Well, I mean, this over here, the first of the year was horrible. I mean, that was not friendly at all. And so that we have friendly times and less friendly times. And so that's part, I think, of our objective for our clients is to kind of help navigate and take appropriate risk, even if it seems like it's really friendly.
Yeah, and there's other examples of 20-year blocks that we could look at where if you ended that 20-year block, if you ended that 20-year block at say 2009 or even in 2010, it'd be like, ugh, that's very difficult. And so we never know what things are going to look like to the right of the chart. There you go. And so when you look at to the right of the chart, we believe that things are going to work out. We're capitalist over here. We believe in innovation and efficiencies. But when you convert your money into ready cash, that ready cash could be used for food, beverage, shelter. That could be used for traveling. That could be used for paying off your house. But whenever we make that shift from one asset to another, we want to have your goals and time frame in mind, because we don't know what type of market we're going to be into when you need to convert that money to ready cash.
Let me go over one other thing real quickly before we move on. I forgot to point this out while we were looking at that last chart, but I'll go back to that here. Again, this is the Russell 2000 chart here, and this is through basically today. And the part I wanted to point out is this line right here that goes from, see this jagged line right here? This line has pretty much been going this way. And prior to 2006, there was a bit of a trend of that line that was going this way. I don't know if you all can see that. It's kind of blended into the stock price, but it's like an arm wrestling match. I never had any good arm strength. I was the skinny guy that always got beat in arm wrestling. But what that line shows us is if you're choosing which pool to swim in with stocks, is this the strongest one to be in or the weakest one? And what that blue line that says RS on it right over here says, it says comparatively, compared to the S&P 500, would this be where you'd want your money, or would you have rather had your money in the S&P 500? And so you can see over here from the 98 to 2006, this wasn't a bad place at all. And then for the last 15 years, the small companies that this represents has been a horrible place. It's been a A friend of ours specializes in these stocks, and it's just been a brutal place to invest in that last 15 years. And quite possibly, there may be a change in character in that sector of the market. And we may be, one of the industry terms we use from time to time is rotating. We may be rotating out of the place where the S&P 500 is leading to a place where maybe smaller and mid-sized companies are. It's hard to tell from right here, but that's a place that's definitely, the small companies have had our attention for a few weeks. And so we'll watch and see what happens there.
This one of the great benefits of being a equity investor as well is, you know, if you and I, if we owned a whole bunch of Pizza Huts, we might have just purchased them, or we might have purchased some trampoline parks earlier in the year, and based on historical information and the growth trajectory, thought, man, we are going to be in the money. This is great. And then all of a sudden, no one goes to bounce around, and nobody comes for the salad bar or the pizza bar, and we've got debt. Our cash flow is not coming in, and we wouldn't be able to turn those businesses over anytime soon, because nobody else wants to buy them. Even if they wanted to buy them, it'd be difficult to get the financing for them. However, with the beauty of owning stocks, and that's what you own, when you own something like the Russell 2000 or the S&P 500, or when you own the NASDAQ, you own these companies. And if you want to be in the S&P 500 for a couple months, a season, you can do that. If you see the strength picking up in the smaller companies, you can rotate and you can become an owner in those companies literally overnight. And the other thing you can do is you can protect your risk. When you're done and you don't want to own the Pizza Hut or the trampoline park, there's somebody else out there who does. There's liquidity in the marketplace. And that's one of the things that just gets my blood pumping with excitement about the stock market.
Well, I would say that if I've been doing the Saturday morning Curious Investors for young at heart investors and presenting ideas out there, but a idea I would throw out there to you is mimicked from one of the investors is William O'Neill, and I'm sure he stole the idea from somebody else. And if you don't take any other investing ideas from me today, is just know this: all stocks are speculative. No matter what stock you own, it's a speculation. And if you don't believe it, just call us and we can give you some examples of companies that seemed like the right place to have your money and turned out to be a horrible place. Big name companies, and we can go back all through history and show you those things. So realize that you can't set it and forget it with stocks, that they require your attention. And if you do forget about them, you may forget about that you used to have some savings there.
And there might be great companies out there, but the stock might be poor. And so just because the opinion of the stock is, hey, I would not like to be in that, the company can still be great. They can be doing good things, but they don't have to always equal each other. You can have a different opinion on the stock.
Or they could be both horrible and you not know it yet, right? Like, I'm going to kick this. I'll kick this one a little bit just because I like it.
Well, that's a good one to pick on. You know, this go back to 1998, and when I first started, this was one that everybody talked about, and they had a CEO who was, mentioned in books and just a savvy character. But yeah, you don't want to fall in love with your stocks.
Yeah, so I'll dial this back 2 decades and let you see what it looked like before. That would have lured you into holding on to it.
Yep. Oh, that is so painful to see.
Yeah. So just because you held it over here doesn't mean that you will always want to hold it, because there was I don't remember who sang the 1960s song Spinning Wheel. You guys know Spinning Wheel? Amanda, that can't be one you know.
No.
You'll have to look that one up after the show.
Well, in this stock,
Spinning Wheel.
Go ahead, Amanda. I'm sorry.
Oh no, I was just clarifying. It's called Spinning Wheel.
Spinning Wheel. Maybe you can play it next week for us.
Okay.
This stock back in the day, I mean, this was like, hey, Doug, this is a conservative stock. This isn't one of those ones with .com on it, this internet thing. This is a conservative stock. This is where we want to keep our money for the long term. And then play out that 20 years, man, it's a rough go.
Well, it has the same blue line that we talked about when I showed you the Russell 2000. See this here? This thing has, and then it just, and what that comparative strength line shows you there, like it's doing really well right now. It's turned up and come up quite a bit this year, but I don't know if that means you should be buying or not. I wouldn't at this point, but what it tells you is relative to the S&P 500, it would have been much, much safer over the last 20 years to have just owned an index fund, because you would have done better and not had as much risk as having money in an individual company like us, like General Electric. And so we're not telling you to sell your General Electric today or buy a General Electric. We're just pointing out that all stocks have risk involved in them, and you need to be aware of that. You just can't set it and forget it.
That's a really good word.
Did we want to look at any other things on MarketSmith today?
I think that's a pretty great takeaway. All stocks are speculative. There's different seasons for different types of companies and different environments. On a big picture, there's going to be a business cycle of expansion, peaking out, some correction, or and then going through just a really tough time where businesses are struggling to keep people employed and keep wages up. And this just repeats itself over and over again. And so depending on how long you've been an investor, you may have 2 or 3 of these under your belt. You may have more than that, but they're just cycles. And we want to help you go through them. And the best way to go through them is just keep aiming for your plan, your goal, and communicating what's important to us and allowing us to walk through those things of life with you.
I know we've mentioned the newsletter once today, but there's another great article in there just about disruptors. And that's exactly what we have gone through this year, and we will experience them again. We've talked about this, but we haven't brought it up in a while, but like the only constant thing in life is change. So there's always going to be change. There's always going to be disruptors, but we adapt, we change, we create disruptions, and we just keep on going.
I'd say that one of the things that this year has reminded people, whether they are aware of it or not, that the economy is not the same everywhere. There's a global economy, which is maybe more of a macro economy, a bigger economy, and there's smaller economies. And so what you're experiencing uniquely in 2020 that I don't recall seeing anytime recently is not only do you have different impacts in different countries, but the economy looks completely different all over the United States. And when I got out of school and worked in Texas in the mid 80s, Texas was in a depression, not a recession. And people were walking away from thousands and thousands and thousands of houses. The late 80s, somebody told me this week that banks aren't risky. And I reminded them, well, you go back and do the history of the late 80s, the savings and loan industry went out of business. The whole industry went out of business. Thousands of banks went out of business because of the Texas economy that was related to oil. And so what we see this year is that the economies that are most heavily regulated by the local governments and putting the biggest burden on businesses, they have the highest unemployment right now. And those who have been opened up and given the most liberty, they have lower unemployment. And so you're seeing just a different economy around the country. So that'll affect, I assume, voters at some point, but all these things are driven by the capitalist motivation and things. So this economy is unique. It's one that causes us all to pay attention, I think.
Right on. Our last show of the year is next week. So with the way the holidays fall this year, December 18th will be our last one, and we'll start back up 2021 strong. But thanks so much, you guys.
See you guys soon.
Bye.
Bye.